Good evening, everyone. Welcome. Tonight we're talking GameStop and the 4-for-1 upcoming stock split. Sorry for the slight delay in getting started this evening. Waiting for a couple of other guests to come in, but we have Sufyan here to answer hopefully any CPA type questions that you might have. Sufyan, do you want to just tell us about yourself very briefly?
Yeah, well, I'm Sufyan. I studied accounting throughout my college, got my accounting degree, and then had the chance to work in public accounting for several years, auditing financial statements throughout many industries. And during that, I pursued my CPA license, which I got a few years ago. And so I'm a licensed CPA. With the state of Minnesota.
Thank you for joining in, and I do always appreciate your help. I reach out to Sufyan from time to time when I'm looking at financial statements and struggling to tie all the pieces together. He can help me save an hour of me figuring it out into 5 minutes, because when you do it every day like Sufyan does, it just makes sense that much quicker. So thank you, Sufyan, for joining us. And hopefully after we get through some of the material here, maybe some of the folks will have questions for you. The big question of the day, I know all of you, I'm going to start off by just stating about me. I am a GameStop investor. I am here for the Ryan Cohen transformation. I've been in this play since I was not in GameStop in the January squeeze. I got in it after that. I watched it run up, and I watched it come back down, but not down like I normally observe in a short squeeze. And that got my interest and got me pretty much looking into this every day and following everybody that was in GameStop. I'm not a GameStop expert. Okay. I follow a lot of different stocks, but I am kind of, my expertise is in doing research and due diligence and applying logic and non-emotion to analyzing plays. So that's where I'm coming from this. I think that this common stock split, the 4-for-1 split coming up in GameStop, is a very bullish catalyst for the stock. I do have questions and have had them for weeks about whether or not it was going to play out exactly as has been laid out on Reddit over the last year, as people were begging for a stock dividend. And one thing that I've said over the past couple months is someone who's covering GameStop should go do some comparisons to other stocks in the last year or 2 years that have done stock split dividends or stock dividends, just a regular stock dividend or even a cash dividend, and see how they performed in terms of price and short interest. And I never really saw anybody do that, although I have seen recently a couple people compared it to Tesla. So if we need to, I've got about half a dozen examples now. I just went ahead and did it myself because I didn't see people doing a broad look at what is the reality, because we can all have theories, but the best evidence is what happens in reality in similar situations. Because a stock split dividend terminology, I get it. It is very confusing to people. It's not something that it's not uncommon, but it's not something that you see every day. I'm going to spare you the whole difference between what is a stock split, what is a cash dividend, what is a stock dividend. I think by now probably everybody is familiar with that. I'll throw some links in the video description. I can pretty much assure you, if you're just dropping in, whether you're watching live or whether you are watching it on replay, in the past 3 days, I've been sent or viewed myself probably every conceivable web page about dividends, stock splits, Reddit posts, computer share, you name it. I mean, I've been literally 20 hours a day for the last 3 days just looking at this shit. So there's probably not much that I haven't seen. There's not much that you could drop in the comments that hasn't already been sent to me. And thank you to everyone who has sent me that stuff, because I put out a tweet and a post on my community tab on YouTube on July 6th. So that was 2 days ago, saying that this stock split dividend is going to act just like a stock split in terms of the shorts. And I know that is wildly different than what people are saying on Reddit. And I know me saying that is going to be very upsetting to some people. And I'm going to just say there's still an outside chance I could be wrong. And I hope I'm wrong, right? I hope that the wildest dreams and the wildest theories out there are 100% correct. And that this exposes all manner of synthetics and naked shorts and whatever you're hoping for. I hope it does, because I'm a stockholder just like you. But the logical research side of me came to the conclusion on July 6th that it was not going to play out that way, that this announcement is going to basically just be a stock split. And coincidentally, Dave Lauer posted a couple days ago that he was going to dig into it, and he did an update today on Twitter, basically saying the same thing. I'll save you reading the whole thing, but in this right here, he says, as far as short sellers are concerned, the borrower of the shares is responsible for paying dividends to lenders. The borrower will receive the share dividend and be obligated to return the new share amount. And more importantly, the final sentence, note that the dollar value of what they are borrowing doesn't change. That's really the key thing that I'm focusing in on. If you have a short on this position, your net dollar amount is not going to change. It's not like they're going to have to go find, let's say the stock splits from 120 down to $30. They're not going to have to go spend $90 more. They're not going to have to spend incrementally, 75% more on their short position to close it out. I'll put a link to Dave's tweet in here also. Let's see if there was anything else. He also had another update 6 hours ago. There's a lot of good comments. Basically all the comments to Dave were the same ones I've been seeing for the past 2 days. Part of the confusion is that there are standard dates in the announcement that make it look like a dividend. It was interesting to me that even someone that worked in that environment, Dave Lauer, had to go research. So let's talk about what research did we do. I can tell you I reached out to ComputerShare, I reached out to GameStop, I reached out to other companies that have announced stock split dividends. We called a couple of brokers, spoke to licensed brokers in the tech support department and asked them if we were short, would our obligation change? I wish Steven was in here because he called Fidelity. I called TD Ameritrade. In both cases, and I would urge you guys to do the same thing. In both cases, the brokers we called said that if I was short GameStop, and then after the distribution date, that my obligation in terms of dollar amount would not change. I'm not going to have to come up with extra money. You can like that statement. You can not like that statement. You can believe them or not believe them. I'm not here to convince anybody. I'm just sharing with you the work that I've done and the answers that I've gotten back. So we have 2 brokers telling us that in their system, this is marked as a forward stock split. That it will behave exactly like a stock split for people that are long and short. Your shares are going to multiply by 4 and your price is going to divide by 4. So The thought that shorts are going to have to go out and spend billions of dollars finding new shares, that does not, by my research or by Dave Lauer's, seem to be factual. The good news, again, is that in many, many cases, when a stock split happens and the price lowers, and this is part of the intent of what GameStop was doing, by lowering the price, you make it more accessible to more investors, especially ones that are wanting to buy lots of 100. And they've made that, they're going to make the price 4 times cheaper. That can provide buying pressure. FOMO, renewed buying interest, whatever you want to call it. And that buying pressure can drive the price up after the split or before the split. And that can apply pressure to the short. So there is a good story here. There's a good story that in the majority of cases, when a stock split is announced like this on a company that is doing well or has good investor sentiment, that you just see the price take off. And one example would be Tesla back in August of 2020. They had almost an 80% price run up from around the $290 range to the $500 range, $475 it closed at. I viewed this one a little bit differently. This was the first ever stock split for Tesla. And you know how rabid Tesla investors are and how much they support that company. They were anxious to buy up these shares at a cheaper price. So I think it was a really, really good case of additional buying pressure and FOMO in Tesla. The other line that I have here, this blue line, is the short interest. You can see that prior to the stock split and after the stock split, the short interest didn't really change here in this period of August to September. And because the price went up and stayed up, the shorts are like, screw it, we're out. And they slowly covered, and you see over the next 5-6 months that the short interest slowly declined. If you were expecting to see the shorts completely get out of their position, that didn't happen. If you think that they just said, screw it, we're going to buy 4 extra shares of Tesla and spend billions and billions and billions of more dollars to stay in our short position, I just don't think that makes logical sense. Sufyan, do you want to chime in on anything?
Yeah, well, first of all, we kind of have to differentiate basically what's the different kind of dividends there. I think people need to know the different kind of dividends.
All right. I got that screen up here.
So there's 3 major kinds of dividends. There's the cash dividend, which is the most common kind of dividend. There's the stock dividend, and there's the property dividend. Tony, could you expand on the property dividend?
The which dividend? Property dividend?
Yeah.
I don't know if do we need to get into property dividends? It's so uncommon.
I mean, a property dividend is just basically just giving out physical, tangible.
Yeah, the example we used for last night when we were having our conference call on this, a property dividend. I just use an example like, let's say Budweiser.
The Cowboys Dallas. Yeah.
Let's say Budweiser distributes a 6-pack of beer to every shareholder. That's a property dividend, but that is not very common. So let's focus on stock dividend, cash dividend, and stock split.
So cash dividend, I would say, is the most common kind of dividend, because when you want to think about it, a company wants to reward their shareholders when they're doing well in earnings. However, what's correlated to their earnings are two things: retained earnings, but also their net income. So when these two are positive, which is a profit, they have excess in cash and income. So they want to basically rewards their shareholders. So they're gonna give cash.
Right.
However, in most case, when you look at a balance sheet, the section of equity, there's a section called retained earnings.
I actually have it here from our
Yeah.
talk last night.
So if you look at, that's April 2022, at the bottom, it says retained earnings. It's negative. We all agree on that?
GME's retained earnings in the last quarter was a negative 64 million.
Yeah, we all agree on that, right?
Yep.
So basically, when it's a negative, what that means is that throughout the years, they either had a really bad one or they've accumulated bad earnings throughout the year, because retained earnings is an accumulation of the P&L throughout the years. It rolls forward. So when they have a negative return earnings, legally, technically, they cannot offer a cash dividend. So the only thing they can offer is a stock dividend, which is the case. Makes totally sense for GME, right? So
yeah, we were having a long discussion last night. Why didn't they do a cash dividend? Why didn't they do a stock dividend, like a 10% or a 2% stock dividend? Why did they pick what they picked? And so we kind of ruled out cash dividend because they have negative retained earnings. And GameStop is if I'm not mistaken, a Delaware incorporated company. And if I'm not mistaken, also the state incorporation laws require that you have to have positive retained earnings to do a cash dividend. You got to have cash, which they do, but you also have to have positive retained earnings.
right.
And GameStop does not have that.
And the way you can get your retained earnings is basically throughout the years. If you can show our little calculation, Tony, at the bottom. Remember what we discussed last night? So if you take the 93.6.
93.6 was the positive retained earnings from the quarter ending January 29th. That's right here on the right.
Right. And since they didn't have any dividends, because usually dividend is included in the rolling the retained earnings forward, since they didn't have any, you just basically add the net income or net loss, which is the 157.9, and that will get you to the 64.3 negative, which
Right.
is
So
a deficit.
in the previous quarter, they had positive retained earnings of 93 million. In the last quarter, they had a net loss of 157 million. When you add negative 157 million to 93 million from the previous quarter, your retained earnings flows through and becomes negative 64. So this plus this positive plus this negative equals negative 64 million.
Correct.
And so that was what we came up with as the most likely reason why they did not do a cash dividend. Right?
Right.
All right. Do you want to talk about a stock dividend real quick? Or do you want to talk about, do you want to talk about why?
I want to go over the stock split and stock dividend, kind of like overview. Let's put it that way. Accounting wise, a stock split doesn't really, you don't have to journalize a stock split. The only thing you need to really do is to write a memo of the detail, but also the date of when that event's gonna actually happen. So in my mind, a stock split divide the market value, but increase the amount of shares, which the dollar amount is the same, right? The dollar, at the end, the total dollar amount will be the same. However, a stock dividend, you have, accounting wise, you have to journalize that event by reducing retained earnings and increasing common stock.
Right.
First, at the date of declaration, you reduce retained earnings as the first journal entry, and you create a payable as a common stock distributable. So that will go in your balance sheet as a payable. But when the actual event occurs, when you have to actually pay that dividend, then you reduce that payable, which is the distributable, as a debit, and you credit the common stock, would increase your equity. So at the end, you decrease your retained earnings and you increase your equity. So yeah.
So I'm going to say that in layman's terms, because we were talking about this last night. I mean, their choices, if they couldn't do a cash dividend, they could have conceivably done a stock dividend, as far as I know. But if they were choosing between a stock split, a normal one, this that I have up on the screen right here, as far as your accountant goes at your corporation, there are no journal entries for a stock split. As it says here in this highlighted section, all that they do, your CPA that works at GameStop is going to make a memo entry indicating that a split occurred and that the par value changed. So if the par value, I don't remember what it is for GameStop, but if the par value were $1 and you did a 4-for-1 split, the par value per share would drop to 25 cents per share, right, Sufyan?
Right.
And that is, par value is not the same as the market value of the stock. This is just an accounting term. When you set up a corporation, you have to declare a par value for each share. So it's just a bookkeeping item. But in a stock split, there are no journal entries other than a memo about the date and the ratio, and noting that the par value changed. And again, the second thing that Sufyan said, if GameStop is indeed calling it a stock split dividend, it may be for an accounting reason. And we had lots of long discussion about this. What is the potential accounting benefit to GameStop about calling it a dividend? And that's still maybe up for a little more discussion. I'm just putting this information out there. We got, I'm sure, other CPAs that are watching or will be watching. Sufyan, you're not a corporate tax accountant specialist.
No, but what I can tell you is, on the investor side, they're definitely going to have a tax advantage.
I'm coming to that next. Let's finish up talking about on the corporate side, on GME's side. If you do a stock split dividend, they will, if it really is a dividend, there will be a journal entry, like you said. So in the accounting, they're going to go in and debit retained earnings and credit common stock dividend distributables. This table right here.
Retained earnings is basically like a P&L, but it's actually in your balance sheet. So when retained earnings is as a debit, then it's like an expense. But when it's a credit side, it's like a revenue. So you're reducing it because it's it's in the debit section.
Yep. And I see Wally's World saying, in a stock dividend split, par value does not change. I think that is also correct. Is that your recollection, Sufyan? There is no change to par value in a stock dividend.
No, because what happens in a stock split is he saying a stock split or a stock dividend?
He's saying in a stock split dividend, there is no change to par value. It's just the book entry to retained earnings.
Right. The amount of shares will increase and the market value will decrease per share.
So then that led us into the discussion, why would they do a stock split dividend over a regular stock split? There must be some tax advantage either to GameStop or the investor, or maybe both. And I have I have some messages that I did not get responses to yet, and I invite any corporate tax experts to reach out to me if you got a good answer on this. But Sufyan, let's talk about what the benefit is to a shareholder of a stock dividend compared to a cash dividend.
Right.
So
So
to shareholders, to you guys that are watching.
yeah. So to put it that way, very simply, if it was to happen, a cash dividend, then you would get the cash right when the dividend occurs. So the dividend will actually be taxable income in your 2022 tax return. But because it's actually a stock dividend, you're not receiving any cash. So there's no taxable income unless you sell that share at a gain.
Right. So just to repeat that, if GameStop had done a cash dividend, you would have received a taxable distribution that would have to be declared in this year's taxes whenever you do them next year. By doing a common stock dividend, you're going to get the shares, but you don't have a taxable event until you actually sell those shares. But Sufyan, depending on if it's long or short-term gains, the dividend rate, tax rate is lower than capital gains, right?
Right.
So you might pay a higher rate, but you get to decide when you sell your GameStop shares.
At a stock dividend, yeah.
With the stock dividend, right? The unknown, and Sufyan, I don't know if you, Stephen was going to reach out to someone also. Did you come up with any other thoughts as to what tax benefits or tax advantages or accounting balance sheet advantages GameStop might receive by declaring this a stock split dividend over a stock split?
Well, I wouldn't say it's an advantage, but I would truly be honest. I basically think if retained earnings was positive, they will offer a cash dividend. But because they have a negative retained earnings, they're offering a stock dividend.
Okay.
And I don't know why, the reason why, but I can tell you that because they have a negative retained earnings, it doesn't make sense for them to offer a cash dividend.
Right. All right. Any other stuff you want to cover from your side, Sufyan? Otherwise, we can take a couple of questions and maybe look at a couple of other examples that I have here on these tabs of other companies in the last year and a half or so that have done specifically stock split dividends, how that played out in their stock price and in their short interest.
No, I mean, I'm open for to answer questions if I can.
All right, and I'm gonna go back to Rocket Fans question since it just popped up. Not interested in the accounting aspect of the stock split dividend. Some people might be, but will it cause GME share recall and squeeze? That is a interesting. You know, I totally understand why many people why many people came to the conclusions that they did about many pieces of the due diligence. Like if you go Google, just randomly Google what happens in a stock split, you're going to find some web pages that say that in a stock split, the company recalls all the shares, changes the par value, and reissues the shares. Now, while technically that might be correct, in reality, it's more like a button is pushed at the DTCC and they divide the share price and increase the number of shares for every share that they have registered. I can't ever recall in 30 years a case where all of the shares were recalled and that forced all the shorts to cover, and you saw short interest go to zero for a day. It just, in reality, what you're reading on a web page is not the reality of what happens on Wall Street.
Tony, there's Maximus that said a good question, a good comment.
Who?
You can really address it. Maximus.
Let me see if I can find it. I thought only profitable companies are allowed to give stock dividends. Do you want to talk about that one, Sufyan?
Yeah, well,
we did touch on that. We touched on that for cash.
We can definitely look at the P&L. Would you present the income statement?
The income statement.
I think it's no, it's at the top. Usually the income statement is at first.
What item are you looking for, Sufyan?
The revenue side and the expense side. That's cash flow.
I think it's up at the top.
Yeah, maybe you can do a Control F. Statement of operation. That's it. Yep.
There we go.
So, Maximus, let's put it that way. When did the stock dividend or stock split happen? The announcement, exactly. When did that happen?
That was on July 6th, I think.
Okay. So July 6th. When was the previous earnings before that?
Well, the quarter ended April 30th.
All right. Tony, what was the income or loss?
Net loss, 157 million.
All right. So are they positive or in deficit?
Deficit.
Right. So they don't have to be positive to allow a stock dividend.
They do have to be positive on retained earnings to do a cash dividend, but you're saying they don't need to be positive to do a stock dividend.
Right.
Yeah, I mean, that was one of my questions. Why didn't they just do a stock dividend? Just do, like, for every 10 shares of stock that you own, we're going to give you a stock dividend of 1 share, a 10% stock dividend. Why didn't they do that? I mean, that's a question maybe that we should be asking.
Just a stock dividend and not a stock split also?
Yes.
Well, you just said it in earlier. It causes a more affordable price per share for investors.
Yeah. Right. If you don't do the stock split, you don't drop the price to $30.
Exactly.
All right. Well, that answers that. Let me get rid of that comment. Again, I'm going to put up Tesla, August 2020. They announced a 5-for-1 stock split right here in it was early August of 2020. The short interest only went down 1%, but the price of the stock went up 80%. So again, here is a great example of buyers being excited that there was an upcoming stock split and driving the price up 80%. Again, to the gentleman that was asking earlier, is this going to cause the shorts to cover? If we get this type of buyer interest, renewed interest, in the stock, excitement, FOMO, whatever you want to call it, absolutely you could get a price run up irrespective of what happens to the shorts. You could get a massive price run up because of this announced stock split or even post the stock split. And that by itself is enough to cause shorts to cover. So this is not a bad news video. This is not a bad news situation. We're just level setting expectations that you might not see tens of billions of synthetics being forced to go buy billions of shares of stock. That might not be the reality of what's going to happen in the next couple of weeks. The next one I looked at was Trade Desk announced on May 10th, 2021, a 10-for-1 stock split dividend. You would think that would, if there were people short on that, 10-for-1, they must be sweating bullets, right? This stock in particular saw the short interest go up after the announcement. That's this blue line right here. But the stock price also went up from 40, what was this, close of $51. It went up to $82. So the short interest went up for a while after the split was announced, and then it dropped back down to the same level it was before. But irrespective of that, there was still a massive price run up, $48 into the 80s. So again, the positive benefit of stock split news. Another one you can look at, NVIDIA, May 2021. Here is when they announced it. NVIDIA was trading, it closed at 144. The stock split was effective, distributed on July 19th. So they had almost 2 months. If there were shorts sweating this 4-for-1 stock split dividend, they had 2 months to get out. And between May and July, I mean, there was, to be honest, in this stock, there was almost no short interest, 0.3%. But after the stock split, it did run up. The short interest ran up. So this maybe is not the greatest example. There was not a high short interest in NVIDIA prior to the stock split. But post the stock split and throughout the remainder of that year, the price continued to go up. So again, I'm going to call that a bullish scenario. I'm not trying to microanalyze any other factors that were going on, like the market situation, the Fed printing money, earnings. I'm not trying to microanalyze any of that right now. I'm just looking at general trends, okay? CoStar announced a 10-for-1 stock split dividend in June of 2021. And that was going to begin trading on June 28th. So they had about a 3-week period. CoStar, early June, when they announced, they saw a general downtrending of their short interest from, it was about 1.5%, 1.4%. Again, not a highly shorted stock. So maybe not the best comparison to GameStop. But unfortunately, also in this case, they didn't really get a huge rally in their stock price. They went from $83 in June. They only rallied to $90 by the time of the split. It kind of languished for a few months, had a run up in October to $100, and then it went on a decline after that. So those were some examples that I wanted to throw up there because I know everybody's talked about the Tesla one. I view, just my own personal opinion, the Tesla run up is very different because it was the first ever Tesla split. And as we all know, Tesla investors are fanatical about the stock. So you guys can feel free to comment on that in the chat. Sufyan, I'll leave the floor to you for a second if you got any other thoughts you want to add in about anything.
Yeah, basically, it's certainly a good. It could be a really good news if retailers or investors see it as a cheaper way to buy some shares. That could create a FOMO and could rise the price up. Yeah,
we did have a massive run up, as everybody knows, from $117 to $135, 135 the day after the announcement, and then of course GameStop made the announcement about the CFO being terminated and some layoffs. I haven't been live the past couple days because I've been working on making sure I went through all of my due diligence on this specific issue for the past 3 days now, 20 hours a day. My general thoughts on the GameStop CFO being terminated and the layoffs. Like I worked in the corporate world for 15 years. I managed engineers. I've been through multiple market cycles and recessions while I was in that environment. We constantly had to have our layoff list, our bottom 10%, we called it. And when things get tough for a company, you are going to trim the fat. You're going to lay off some people, whether you're just being cautious in advance or whether you're in the middle of it is really irrelevant. I'm happy to see at this point, without any more information, I'm mostly bullish about the layoffs because I saw GameStop did do a follow-up press release that said, look, as we are going through our redevelopment of the company, we now have a better sense a year into it what type of staffing we need, and we got rid of some people that we don't need. I can buy that argument, and I think that is a positive decision. Management is taking decisive action, and employee salaries are a huge cost to most companies. So I don't know.
Was the layoff before the stock split or after the stock split?
After the day after.
Because I would assume that the CFO is involved in that decision.
Yeah. So I'm not going to talk about the computer share getting their shares first and then having to parcel them out to brokers. I have no evidence that says that is the way that it happens. I've seen that in everybody's video, everybody's tweet. I've seen it a million times. If someone can show me the 100% indisputable process flow that says that how it happens, I'm happy to look at it. I called computer share. It was like talking to somebody in a third world country, and I'm not saying that to be mean to computer share, but they refused to answer any process questions. I understand the role of a transfer agent. I'm not necessarily in agreement or disagreement. I'm just saying I was not able to independently verify that GameStop's going to give all the shares to computer share and then they're going to parcel them out, whatever's left over, to the DTCC. Maybe that's true. Maybe that's not. I'm not going to comment on it because I'm not going to speculate in this video. And yes, I've seen that posted 1,000 times. I don't generally believe, well, it doesn't matter what I believe. I don't have a way to verify it, so I can't comment. The DTCC has its own dividend and stock distribution process where a company can pay a dividend directly to the DTCC. I don't know because GameStop would not answer their phone and they did not answer their email. I don't know which process they use, so I can't comment on it. I'm still working on it. I'll do an update if one of you or GameStop gets back to me with more details. I'm happy to do an update.
Here's a good question, a good comment.
I'm not going to go by a Reddit post. I'll tell you that right now. Don't send me someone's Reddit post saying that Computer Share is going to get their shares, all the shares first and parcel them out. That is not evidence to me. That's just someone posting an opinion.
Antoinette said you can't compare GME with Teslas.
You cannot compare.
Yeah.
Who said that?
Antoinette.
Antoinette. Okay.
Antoinette. Not in the same league.
Yeah, I mean, I know where Antoinette's coming from. I mean, they're completely different companies, completely different business models, and none of the companies that I threw up for comparison were direct comparisons to GameStop. I'm just looking for any company in the last 2 years that did a press release saying that they were doing a stock split via a stock split dividend. And you can go Google that yourself. You can go into Google and then go into the tools, set your custom date range, and search for I think the words that I searched for was in the form of a stock split dividend. So there's a little tip to you if you want to go see how many have done that. It was only about half a dozen in the last year and a half that used that exact terminology. And I'll tell you also what the licensed brokers told me when I called my broker. He's like, he actually said, I wish they wouldn't use that word because it's confusing to people. And it is exactly the same as a stock split in terms of how it rolls out to everybody. He's like, as far as we are concerned, they're interchangeable. This was when I was asking him, if I was short, would I have obligation to you? Are you going to debit my account for hundreds of more dollars or thousands of more dollars because all of a sudden I didn't get the dividend or I owe the dividend to the lender? He's like, no, there is no difference between what is going to happen with GameStop between a stock split dividend and a stock split. It is going to be exactly the same if you're short. I called a broker. They told me that. Another one of our members called Fidelity. They told him the exact same thing, independent. And independent of us, Dave Lauer went out and did his own research and came back with the exact same answer.
Meaning
so we're not just creating theories on Reddit. We're verifying with people in the industry what is going to happen.
Meaning that the shorts won't pay anything, right?
The shorts will not have any new financial obligation after this dividend drops, after this stock split.
Yeah.
They'll be in the same financial position. So, bottom line, there is potential for good news based on you guys or anybody out there in the market or institutions seeing that the price is going to be 1/4 of what it was, or being excited about participating in a stock split. Those very often, most of the time, drive the price up. The best example I saw was 80% over a 3 or 4 month period. With actually with Tesla, it was a shorter period than that. But if there is buying pressure and if the price is driven up, 100% that will apply pressure to anybody who is short. And
question for you, Tony.
Yeah. Go ahead.
After all this discussion, I think the people need to know: are they still gonna have the same amount of liability or not?
The shorts?
Yeah, that's the bottom line.
Yes, the shorts will be in the exact same position, liability wise, financially wise. They will owe the same dollar amount after this stock split dividend. They are not going to have to go out and find billions of dollars to buy billions of shares. There is a very bad problem in this community of meme stock traders, of which I am one, and a content creator in one. There's a very bad problem of people creating catalysts that don't pan out, getting you hyped up, and then you get this hype disappointment cycle every day. And that wears you out. It makes you depressed. And I'd rather give you the reality, even if it's not the reality you don't want to hear, so that if you're in this play for the right reasons and with the right frame of mind, that you understand when nothing happens and you don't just abandon the play. Because what will make this thing blow up in a bad way for retail investors is people getting discouraged and moving on. And that excitement, depression cycle, I see it wearing people down. You've been promised every day for a year, this, that, and the other catalyst, and they never have fucking worked out because people say what they need to say to get you to come back to their channel. And I'm not here for that. I'm here to give you the facts, and I'm here for the long term. And GameStop and AMC are not the only stocks I cover. I cover many things, and I always try and tell you in every play, both the positive and the negative, so that you have the right frame of mind of what you're doing with your money. Ultimately, what you do with it is your choice. I'm not here to tell you what to do.
Another good question, a comment. She said, let me add, the shorts have been covering and taking profits. They're saving their profits. Do you see that?
For GameStop, who is the name? Sufyan, Antoinette.
Yeah.
Let me add, the shorts have been covering and taking profits. They're saving the profits to reshort these stocks. So let's just put up the Ortex one more time for
GME.
GME. Yeah. I'm not exactly happy with GameStop about being so quiet for the last year. I've shared that frustration with you guys when I've covered GameStop's quarterly calls. I'm not exactly happy about the downtrend in their earnings per share over the last couple of quarters, but I do like Ryan Cohen. And maybe some of people that hate GameStop, and I know some of you are in the chat, are saying, well, you have bearish reasons and you don't believe in Ryan Cohen. I do believe in Ryan Cohen's ability to come up and transform this company into something new. Whether or not I will be right, well, I don't know. That's why I invest the amount of money that I'm willing to lose in any particular play, if it is a speculative play. And clearly, when I got in this, it was a speculative play a year ago. As we move through time, Ryan has, and the CEO, neither one has really shared a whole lot of specific details about what they're doing other than this NFT marketplace. And fundamentally, I'm in it to see if Ryan Cohen pulls a rabbit out of a hat, transforms and saves this company into something that excites investors and sets, Wall Street on its ass, all the bears. Whether or not he does that, we'll have to all wait together and find out. Ortex estimated short interest for GameStop. So back in early June, it was at 28%, and right now we're at 21%. But now that the price is going up, I don't know. We may see that short interest go up, because that's what they're going to do. Do not be surprised if the short interest goes up as the price goes up. If the price were to go up 40 or 50%, almost certainly there would be some shorts covering, right? Because they don't want to get underwater. They don't want to lose any profits they have, but they will also be taking out new short. I look at short interest. I love to see it over 20% on anything that I consider a short interest play, but I really love to see it much higher than that. Much, much higher. Bell Biv DeVoe says, I just play the end of Fight Club over and over in my head. That's what I envision when the last. Oh, Lordy. Nana Ape says, I don't know who who is this jockey that keeps cutting down. I'm not reading any comments about AMC, so you guys
Yeah, or to
you can
there
feel
it's
free to
it's
ignore that. This
GME.
is not,
Yeah,
tonight's not an AMC chat.
no, it's GME.
And I listened to Pantheon last night, and I'm going to say the same thing that he said. You know, if you're a GME elitist, I got no time for you. I invest in dozens and dozens of different stocks. I have GameStop and AMC both as two of many in my roster. Every single one of you have the right to invest in whatever stocks you want, and I hope that you ignore anybody who's telling you you shouldn't be investing in one stock or the other, because you should be in this one, not that one. If that's their logic, you know, forget those people. That's just ridiculous. There's thousands and thousands of stocks. There is no one stock, and you can be in both, or you can be in one or the other. We can all still be friends. But if you're going to come in here and hate on other investors because of the stock they picked, I got no time for you, and you'll get no comment from me. You'll probably just get blocked from my channel. That's not because you hate one particular stock. It's just because you're full of nonsense. That's not the way I do investing. That's not the way that I want anyone that participates in this channel to think about investing, that you can only pick one stock. Picking one stock is the single most riskiest thing you can do for your portfolio. And I would strongly advise all of you to diversify your risk across multiple sectors, multiple stocks, and never put more in one play than you're willing to completely lose on that play. And also, don't put money in a stock that you need next week, because then you're going to get emotional and you're not going to give the company time to do the things it needs to do to wreck a short thesis. Sometimes these things take time.
Like meme stocks.
There's plenty of examples, and we've seen them in the past few weeks, right? Redbox, Revlon, ENDP, EVFI, all the ones we saw last year where things run up and run down real quick. Those are retail FOMO plays.
Mm-hmm.
They're quite often high short interest, high cost to borrow plays. If you participate in this channel, and especially if you're in the Discord, I will be telling you what the realistic price to sell is. I've listened to all the other guys like saying Redbox is going to 500. They're fucking dreaming. You know, we were out of that thing before 18 bucks. It's perfectly fine to play those plays, but you got to take more than a minute to look at a cost to borrow and a short interest to understand what a realistic price is on that stock. Now, does it sometimes go higher than I expected? Yeah, GameStop was one. GameStop in January of 2021 went way higher than I expected. Occasionally, I don't get it exactly right. So our tool for that is doing a trailing stop loss. You don't have to try and time the top. You can do a trailing stop loss and ride it all the way up.
What are your first two indicators of a FOMO play?
My main indicators of a FOMO play would be a company like, let's pick Redbox or Revlon, companies that have wrecked financials. They're just, if you look at the balance sheet, the income statement, cash flows, it is horrible. And there's a reason those stocks are so cheap or filing for bankruptcy. And in the case of Redbox, they have a buyout agreement signed for 50 cents a share. Why would you think that stock is going to run up to 500 bucks? Wall Street has already valued it at 50 cents a share. Anyone who was paying more than that was dreaming, but we played it. We played it because retail is not always rational. So we rode it up right along with everybody who was thinking it was going to 500 bucks. And we got out when we saw it top out and volume drop off. And I saw people making videos for days on Redbox. It's just a temporary dip. It's going to go to 500 tomorrow. I see it on Mullen. I've watched one guy now lose $70,000 in call options on Mullen, thinking it's going to $10.
I mean, it's not hard. You just go to the P&L and you look at the revenue.
If you
They
do
don't have
real
any
due
revenues.
diligence, right? You can't look at the AMC chart or the AMC volume and price and compare that to Mullen and say, based on AMC's pattern, here's what Mullen's going to do. I see this guy doing this. This is not rational analysis. Mullen's not going to produce any cars for 2 years, 2024, in meaningful volume if they get that far. And I see the investors saying they don't want to improve the dilution later this month. If you don't approve the dilution to Mullen, they're going bankrupt. They need cash to move that company forward. So Mullen people are dreaming if they think it's going to go to $10 on a short squeeze. The short interest is what, like 7% on Mullen? I'm not mistaken. But people see patterns where patterns don't exist. This is a problem with retail.
So your first indicator is the financial statements. What's your second one?
I do look at the short interest, and I look at the cost to borrow, and I look at the news that is starting this thing. What lit the fire? What was the news item? I call it PPN, plausible pump news, plausible pumpability news. There's always a match or a spark that lights these things on fire, and it might be legit or it might not be legit. 90% of the time, it's not legit. What was another one? Xela, X-E-L-A. Xela, a week or two ago, announced a 3-year contract that would add, I forget the number, let's just say $100 million to their revenues over 3 years. But when I looked at the financials and saw how much money they're losing per quarter, again, I'm making up numbers, but they were losing, Sufyan, like $40 million a quarter. And if I divide out that contract that they were awarded, it was going to change their loss from negative $40 million a quarter to negative $30 million a quarter. That's not good enough news to justify a run up in the stock, but it ran up. And I made a comment when it ran up. People were asking me, should I buy Xela? They were asking me at the top, should I buy Xela, X-E-L-A? I said, no, in a couple of days, it's going to drop right back down to 13 cents. And it, in fact, dropped below 13 cents 2 or 3 days later, because that was people taking advantage of retail to pump something on not real news, not meaningful news that Wall Street would go in and buy that stock. Does that make sense?
Yep.
So I look at the news. I try and use my experience to understand if that is real news or if it's pumper news.
Mm-hmm.
EVFM and ENDP both have right now going on pump news. These are troubled companies. ENDP didn't fare so well, but EVFM, it's been on fire, right? It's been a legit play. No problem with that. Ride it up. We love to make money along with people that are pumping it and FOMOing in. And I have no problem doing that. I will do it all day long. I'm not shit talking these plays. What I'm saying is you got to be careful of people who are inexperienced telling you what the price of this stock is. What was the, oh, I have it in my watch list here. EVFM, sorry. It's been on an absolute tear. And congratulations to all of you. I know some people in our Discord made money in this. 30 cents up to $1.50 in a couple weeks. That is excellent money in a downward market like this, like we've been in since November. You got to look for these opportunities. Your only chance right now to make money is every day wake up and look for these opportunities. And you got to, if you're day trading these, you better have 25,000 in your account or keep up with pattern day trading rules. Don't get caught.
Stop loss.
Don't get caught violating pattern day trading rules and having your account locked. So you need to go, these people that are pumping these plays telling you get in and out, I don't ever hear them talking about that. But the investors that I'm talking to, in my Discord and on my channel, generally are experienced day traders, and we're sharing ideas and we're sharing plays. My Discord is not just about me. I call out a bunch of plays, but I also ask for input. Sufyan, or I see Steven's in here too. Sufyan and Steven are both members of the Discord. You guys, am I lying or am I telling the truth?
Yeah, I mean, I've joined the Discord when, Tony, about December 2021, if I'm correct. And I mean, yeah, people, you share a lot, but also there's a lot of people that share some good input in terms of stocks, opportunities, options,
We have
even
we have
crypto.
guys in there that are, well, what I would consider almost experts in options trading. That is all they spend their entire day doing. We have guys like Sufyan that are a CPA. We have many, many real estate investors. Like the wealth of experience in the Discord makes it a good group to bounce different ideas off of. And none of us, I think it's fair to say, none of us are emotional traders. Everybody, we have at times what I call gallow humor. So it's maybe not the Discord for everyone. Don't come into my Discord expecting it to look like Reddit or some of the other ones. Twitter, it's not that. We're not posting memes over and over. We're figuring out how to make money, get in and get out.
Can I add something?
Absolutely.
I don't want me to do a sales pitch, but yeah, I mean, anybody that will join the Discord will definitely learn a lot. If you really read throughout all the text, I mean, at first, if you're a new beginner investor, you'll have to plug some pieces all together, but over time, you'll definitely learn a lot. But the main takeaway is not being emotional. If you're not being
Cold-blooded and dead
emotional,
inside. That's what we're aiming
right,
for.
right, and then the rest will come. But the first thing is to not be emotional.
Steven, welcome.
Hey everybody, can you guys hear me well?
Yeah.
Yes, sir. Steven, tell us who you are, what's your YouTube channel, and then share some thoughts with us.
Hey everybody, you guys have probably seen me by now. My YouTube channel is Just Another Ape, because that's how I view myself, regardless of your experience level, where you're at in your trading journey, it doesn't matter. We're all in this together, and I think that's what keeps this thing going. And to respect to Tony's Discord, the reason I like his so much is because we all have so much different lifestyles and trading strategies. Types of investors are different. Some of us like the long-term stuff. Some of them are more risky. Like you were saying, we have some guys that are in options, and I don't know anything about options, right? But there's something for everybody, So, and we don't mind teaching you. We're not gonna charge you $100 to ask simple questions, right? We're average everyday people.
It's not a $79 a month Discord. The only reason I charge 16 cents a day is to make it slightly difficult to get in. I don't want it to look like Reddit or Twitter. So,
and what's really remarkable, Tony, is that you're almost always available, which surprised me a lot. I mean,
I jokingly say that I don't sleep, and you guys can probably attest to that. I'm in that Discord from typically 6:30 or 7 a.m. till sometimes 2 a.m. the next day.
Right. So if you want to get a hold from Tony, you'll get a hold of Tony within 24 hours, guaranteed.
But I don't want this to be a Discord talk. Steven, let's talk about how you participated in the GameStop due diligence work that we've been doing for the past few days, and What
Oh,
what
yeah.
thoughts do you want to share?
So I'm sure most people, including myself, were confused when the GameStop share split dividend, or however they wanted to word it, came out. It confused a lot of people. Most people were convinced that it would be a catalyst to where short sellers would be forced to pay for extra shares that they weren't prior aware of. And me and Tony and Sufyan, we get to the bottom of this stuff because I want nothing more than the stock to rise in price because I'm often a shareholder just like you guys. But at the same time, trading is a journey, it's a learning experiment. So you have to always be in a pursuit of the truth. So if I don't understand something, even if it's not in my favor, I'll want to understand it. And the more you understand, it's like putting tools in your toolbox. And as you go forward in your journey, you're going to start to, it's going to make more sense. So, sorry, that was a little long-winded, but what I did for the GameStop dividend, I didn't understand it at first. So I contacted my actual financial advisor, got his opinion, and then I called Fidelity and spoke to their trading team. Most of these brokerages that you guys have their own trading team, and you can get a hold of them fairly easy, and they don't have to be your direct financial advisor, and they'll answer your questions. And we got to the bottom of it. I don't know how much you guys talked about it already,
We've
but
talked about everything. I'm just giving you a chance since you came in late to share your specific contribution to this group effort.
sure. So I got my opinion from Fidelity. Tony and I cross compared that same opinion with other brokerages, and Sufjan's been a great help, mainly because he went to school and he professionally does certified accounting. So regarding the GME stock split, it was a 4-for-1. So obviously on July 22nd, I believe you guys are going to see the share price decrease, and the share dividend you'll be paid in bonus shares. But as far as other other YouTubers covering it, I believe that there's a lot of misinformation going around. And like I said, guys, you have to, over time, you'll learn to filter out the misinformation. It just takes a little bit of experience.
And I 100% do not think that any of that misinformation was intentional, right? As I spent, 60 man hours researching this, I stumbled across the rationale to understand why every single one of those posts or videos was made. People talking about they got to recall the shares before they split. People talking about a stock dividend has to be paid by the borrower. I understand 100% of it. It's freaking confusing. But when you read something confusing and you're reading something and then interpreting it the way you want it to be, that's a dangerous way to do research. And that's not how I do it. I question everything. Even if it doesn't support my end goal, I'm still going to try and do the positive and the negative. And hopefully my research matches what I wanted to say. But if it doesn't, I'm still going to tell you the truth. And I think some of these people probably read something and they stopped questioning as soon as it confirmed what they thought they wanted it to say. So that's not intentional. That's just maybe not a strong scientific or engineering or mathematical background in research, or a logical background. And I always joke, I have no emotions. I'm 100% logic. So I got to, everything has to make sense to me, and I got to question everything.
Right.
And Stephen, I don't know, you weren't on earlier, but independent of our own research, you did your own independent research. I did my own independent research. Dave Lauer did his own independent research and came up with the exact same answer we did. I just published mine 2 days ago, and he published his today.
Right. See, one thing I'll say to the people watching the stream is I pretty much live on Investopedia. Like I've known what a dividend is for the last 10 years, but just because you hear the words doesn't mean you understand what it is, right? So there's a clear difference between a traditional dividend and a stock split share dividend. So you, as an investor, if you guys are active in the market, it's almost like another job, right? Like you have to take it just as seriously as you would in any other job. So you have to constantly be sharpening your tools. So just because I think I know what a dividend is doesn't mean I can't or I shouldn't take time out of my day to go back and research what it is over and over again. Because, like I said, you have to sharpen those tools. Because then a time comes like this where Ryan Cohen issues this, and now all of a sudden no one knows what they're doing, yet they're pushing out information. And like Tony said, it's not intentional. We're all learning here, but at the same time, I think the more accurate you can be over the course of time, the more money you're going to save inherently and make less mistakes and cause other people to stop making mistakes too.
Steven, can you expand on what you mean on traditional dividend for the people?
Okay, so traditional dividends and how it affects either a long shareholder or a short seller. So typically, if the company's profitable and they've issued a dividend in a normal traditional stock, so take Coca-Cola, right? They've issued a dividend for the last 100 years and they haven't stopped. So the company rewards you, since you're a shareholder, a certain percentage of their company over time. Now, obviously, you're going to have to speak to a tax consultant about what I'm about to say, but based on my knowledge, dividends are taxable as you're paid them over the course of the year. You get a little paper in the mail that says you earned X amount from Coca-Cola or whatever your portfolio pushes out. So there is tax implications, is where I'm getting to, for Coca-Cola, but there's also tax implications for you on the long side. But obviously, on the short side, things get a lot more complicated. And for purposes of Sufyan's question, I think that is suitable.
Right, but the bottom line is because they receive cash, right? That's the thing. They receive cash. That's a cash dividend, right, Steven? That's what you meant.
It's whatever the company decides to issue, right? So they can either issue shares or they can issue
Well,
cash.
for the tax implication, right? If they get a tax implication right away, right? If they get a cash dividend, then they'll have to pay taxes on that cash dividend. But if they get a stock dividend, is that what you meant when you said traditional dividend throughout cash?
Yeah, so traditionally, if you're receiving cash, you're going to have to pay capital gains on that tax, and most of the time, it's short-term capital gains. It just depends on how it fleshes out throughout the year on your portfolio. You'll get that statement, you take them to the professional, and they'll do it for you. Now, if they do it in shares, the information I've received is it's only taxable upon selling. So what I talked to Tony about was with GME, they're issuing shares, right? So if you think in your head, say you're long GME, and you're given shares that you didn't have before due to a stock split, and you know that if you sell, you're going to get taxed, right? So say you wanted to avoid that tax and you still were bullish on GME, you're incentivized by the company to hold. GameStop wants you guys to hold. That's why they're giving you a stock split. That's why they're giving you shares. Now, obviously, it doesn't affect the market share as an entirety. It inflates the outstanding shares, but that's the idea. The general idea is to make the share price affordable or appear affordable. It'll get sliced down to what, $30 or something? Because right now it's not attractive at 130. So if you're looking at it from GameStop's perspective, it's a double whammy. It's a double win for them. A, they get more people to buy the stock because psychologically it looks better. And then B, you have that thing in the back of your head that says, I shouldn't sell because I might get taxed.
Right, but
So
but
that's on the long side.
why would they? We discussed about that before, but I want to
Yeah,
get
let's
your
not
thought.
not go through all of the different types of dividends and tax stuff again because people can rewind if they miss
Yeah,
that part.
but
Let's
Right.
get
Steven,
to,
why
go ahead, Sufyan.
would they issue a cash dividend versus a stock dividend? Why a stock dividend?
Why choose stock over cash?
Right.
So you're not going to actually know the answer. We can only speculate, right? Because a company doesn't necessarily want to tell you their weaknesses. So typically, if a company, to keep it simple for the viewers, say you're low on cash, or you don't want to give up your cash. Say you're a cash heavy company. Maybe you're a startup. You view it very valuable, right? You don't want to give cash then to your shareholders. You would rather pay them in shares and hope they stick around. Now, the opposite's true if you're an extremely profitable company. So, say like Berkshire Hathaway, I don't know if, oh no, they're not doing a dividend, never mind. Like Procter and Gamble, they've been profitable for 100 years and they don't have a cash issue. So they can comfortably issue cash. So at the end of the day, cash or shares, it's going to be at the direction of the board and the CEO and all that.
Right. Good.
Wired Ape sent me a document. I actually have seen this one, Wired Ape. I mean, I'll put it up on the screen for everybody. There was some interesting footnotes in here. Let me move it over to the other monitor. At this point, considering how many web pages and documents I've looked at in the last 60 hours, I'd be shocked if there wasn't one that I haven't seen yet. But this was a FAQ that Eastman put out about a stock split dividend. Why did they split the stock? Well, we already know why companies do a stock split, because they want the price lower and they want more shares out there. But what is a 2-for-1 stock split in the form of a stock dividend? Wouldn't it be nice if GameStop would do a FAQ like this? Stock split is a common method to increase the number of shares outstanding. A dividend is a common way to implement a stock split. Each Eastman stockholder will be paid 1 additional share of stock for each share he owns as of the close of business for the stock dividend, yada, yada, yada. Really what everyone wants to know, and what it doesn't cover in this document, the reason I didn't bring it up, is what is going to happen to the shorts. That's what you guys really want to know, right? So since that was not in this document, we had to go to other means, other due diligence methods, research methods to get that answer. Does the stock split dilute the value of my Eastman stock by increasing the number of shares? No, the stock splits are not dilution. That I think is hopefully understood by everybody, but if not, there's the answer to that question. Is it taxable transaction for me? While individual stockholders should consult with their own tax advisor, a stock split in the form of a stock dividend is generally not a taxable event, as we've now talked about twice in the past hour, or however long we've been going for, hour and a half. Stock dividend is not a taxable event for U.S. taxpayers. But we do believe that when you sell the stock, just like anything, you're going to pay capital gains on it. Why does the quarterly cash dividend? Oh, we're not doing a cash dividend, so that is not applicable. Will the par value change? No. One other. Here's who mails the split shares. Our stock transfer agent, American Stock Transfer and Trust, will mail written notice to registered stockholders indicating their split adjusted shares and make book entries. If your stock is held in street name through a broker, the information will be sent directly to the registered holder on your behalf. Too bad it doesn't say in here that their transfer agent will only parcel out shares if there's any left over after the direct DRS shareholders are taken care of. I know I sure would like to have an explanation for that, but doesn't say what the process is for people that have it in street name. Does it go through their transfer agent or not? It does say here, if your stock is currently held in a brokerage account, the info will be sent to your broker. The other thing that I came across that might be of interest to people, and I've seen this question out there in comments. Oh, maybe it talks about it here. I'm going to say what I read, and then I'll read this paragraph and see if it's different. I read that the effective date does not matter. The date of record does not matter, because if you buy GameStop after the date of record, what I read in another document is that the right to the dividend transfers to the new buyer. So if you're the new buyer, you still have a right to the split, to the dividend. Let's see what it says here. This one says, what if I sold before the record date? Well, if you sold, you're not going to get the stock split. But on another document, which I don't have saved here, I did read that if you buy after the record date, you will still get the stock split. So if you had that question, hopefully that answers that. Wired Ape says, to calculate the value of common stock, multiply the number of shares the company issues by the par value per share. Sufyan, can you help us sort through this real quick? When they do a stock split dividend, the par value is not changing, right?
Right.
But the number of shares is increasing.
Right.
But so on the company's book, since the par value is not changing, but the number of shares are increasing, from an accounting perspective, does that increase some value inside the company?
Well, let's put it that way.
We're debiting retained earnings.
Let's put it that way. What if the par value was $10? All right. And before the split, the company was traded at $20. But then they're doing a 2-1. Then you take that 20 divided by 2, which is 10 now. So it's equal to par. But if it was below par, then that would be good for the company. That would not reduce retained earnings that much. But if it was above par still, then it will decrease retained earnings even more.
I think maybe that's a good topic to have offline continuing discussion on. But I think our general thought right now is that correct me if I'm wrong, Sufyan, it's not meaningfully changing anything as far as valuation of the company. But we did say at the beginning, this is one of the unanswered questions that I have. And I did reach out to GameStop and ask them. And I also have reached out to a corporate tax specialist, a CPA, to ask him the same question. I just don't have the answers just yet. Because I think there must be an additional benefit to GameStop. I don't know.
Yeah, in terms of, so at a bigger scope, when you do corporate tax accounting, it's all about bases.
Yep.
And I cannot really expand on that deeply, but what I can tell you is that your common stock, which is related to a stock dividend and stock split, whatever, if you increase it or decreases, that will have a consequence event with your basis. So whether it's good or not, there's definitely a tax advantage or disadvantage about that.
I'm going to put up a couple of questions that I starred that went by earlier. What happens when they give out stock dividends to 79 million shareholders and people say, I didn't get my stock dividend? I'm going to say we'll address that bridge when we come to it, but sometimes there are delays of several days, and when for distributions to happen, there shouldn't be, but if there is, contact your broker and stay in touch with them. If it's been a week and you still don't have your distribution, then I want to hear about it.
Have you ever had a stock dividend?
I've had cash dividends and I've had stock splits. I don't know. I just never paid attention to the wording before to see. In 30 years, this is the first time that I've cared enough to research something this much. That for me, is it a stock split? Great. I'm getting more shares for less price. Is it a cash dividend? Great. I read it and go on with my day.
Yeah. Have you heard about stock warrant?
Warrants?
Yeah.
Yeah, a whole nother topic, and I have a video on those because there was a lot of confusion on what was it, Redbox warrants. If you want to know warrants, go look at my warrant video from a week ago.
Sure.
5-minute video. Let's see. Richard said warrants are basically they're long-term calls. Richard says if I sold a covered call for August, strike 170 and do not buy it back before the 22nd, will I still get 4 shares? Typically, Richard, what happens in a even split like this, a 4-for-1 split, is that your options are going to split to the same ratio as the shares. So you'll have 4 calls with a lower strike price. Sometimes it is a little more confusing when it's a 3-for-2. And as my trading team told me at TD Ameritrade, when I asked that question, they said sometimes things are finagled a little bit differently, but generally options, and I've owned options through splits, generally it just splits exactly the same as the shares. Chris says, in the scientific community, they question everything when a theory is presented. This is done to fully understand, and they don't just take it as fact. Yeah. Some of you that already know me know this. Those that don't, my college degree was in economics, finance, and banking, but I didn't work on Wall Street. I was an engineering manager. And so my 15 years in corporate life was debugging, troubleshooting, and fixing problems. And you can't go into fixing high-tech products you can have an idea what you think it is, but a lot of times in the first hour, you figure out that wasn't it. So you got to, gosh, man. And in the military too, when I worked on airplanes, I've had weeks and weeks of courses of how to do problem solving. And you got to consider many, many possible root causes. You can't just latch on to one idea and that's it. You're going to fail. And that I think is what happened here with the due diligence on this. People just read something and they ran with it and they didn't question it. Holding GameStop in a margin account may not give you the right to dividends.
That has nothing to do with it.
Yeah, this is not a dividend, even though they have the word dividend on there. I want you to think of it as a stock split. Everything that you have will split.
That's the biggest issue right there, is that they shouldn't have put that word dividend. That's what confused everybody.
That's what TD Ameritrade trade team told me. He's like, I wish they wouldn't use that word because in our system, it's already set up as a stock split. He's like, we use the word interchangeably as far as it affects our customers and our shorts. There is no difference.
To double down on what Tony just said, interchangeable. So earlier I was saying, look, go back and look at definitions of words like a dividend, because dividend's not the only word that's interchangeable in the investor dictionary. There you go. So it's always beneficial to go back and check that out.
Tindy Time, what's up, buddy? Let me put Tindy's comment up about the guy that was asking about calls. I think he's wondering, will he still get his split because he sold covered calls? I mean, you're going to see any existing option position, the number of options go up from 1 to 4, and the strike price divide. Now, if you sold calls, I'm thinking that there's a very good chance that due to excitement over this stock split, that as soon as it splits, the price is going to run up. So your strike price on your calls might be too low after the split, if that makes sense. You're going to have to make that decision for yourself. And I have no idea what the stock price is going to do, but most of the time after a stock split on a company that investors like, you'll see a price run up. And we got a bunch of other stuff going on in the economy in the next couple of weeks, where there'll be talk about, are we in an official recession? We got the Fed going to be doing some interest rate hikes. So what happens in the economy and how that affects the market and all different stock plays, that's a toss-up. What I told my folks in the Discord at the end of June, mid-June, is that what I expected for all stocks would be a mid-July rally, because there's just not much going on. And then as we go into the late part of June, you're going to see things dry up, slow up, maybe become a little more red, because Wall Street and institutions are going to take a pause, or maybe even take risk off the table while they wait to see what the Fed does. So do not be surprised in the coming weeks. Whatever rally we're going through right now could, my prediction is it's going to peter out across everything. Now we'll get pockets of love, and maybe GameStop will be one. I hope it is, and I hope AMC is too. But in general, I'm going back to bearish plays towards the ends of the month on my other investments. Right now, I'm enjoying the mid-month rally, early month rally. Yeah, if you guys, I think our mods are all at movies or out enjoying their Friday night. So if I need to block someone,
I'm hearing Thor was really good. I need to go tomorrow.
yeah, I got a couple movies I need to go see. Okay, Grandpa Barney. Yeah, guys, those of you that I know your name, if someone is being, look, we don't block people on this channel unless they're being assholes to other people in the chat, or they're being assholes to any other content creator. We're here to talk about GameStop. We're here to talk about a stock split. And if you don't have anything meaningful to contribute, or you're not being, if you want to chat with each other and be nice in the chat, that's fine too. But if you're being a dick, your comments are going to be blocked, and that'll be forever. Matt Labarge, what's going on? And that same goes for comments after this video is done. I welcome any dissenting opinions. I'm not saying I'm 100% correct on this. This is our best effort at due diligence. It's been verified by multiple people, not just me or people in my Discord. And if I'm wrong, I can promise you I will delete all my tweets and issue a correction tweet and do a correction video. I'm not just going to gloss over this and pretend that my due diligence never happened. I don't do it like that on this channel. And if better or more information comes in, I will absolutely do an update. The other thing that I just want to say for anyone that's just joining in, to save you from rewatching 2 hours, if you're just coming in at the very end, I invite you to go back and watch from the beginning on replay, because there's a lot of good info. But it is our best understanding that this is going to be treated, best understanding by reaching out to multiple reliable sources, not Reddit, that this is going to be treated exactly the same as a stock split in terms of how it affects you and how it affects shorts. There's not going to be any tens of billions of synthetics searching for shares to go buy. That's just not how it's going to work. If I'm wrong, hey, we'll know in a few days, guys. And I
Yeah.
wish I am wrong. I wish I am wrong because I am long GameStop. But in the meantime, that doesn't mean that it's bad news. Stock splits typically see a price run up, and a price run up because of buyers buying the stock is going to put pressure on shorts. So there is that, and that's good enough for me.
I mean, just stock splits alone, look how many, I guess you could call them mini squeezes that it caused for Tesla. Tesla split like what, 5, 6 times, and almost every time it's ran up substantially. If you were swing trading Tesla, not saying you should, it's every time it did a stock split, it's almost predictable every time they announce it.
Yeah, that's some of my favorite plays was buying calls right before stock splits. Back in the old days, I don't like doing that in a down market. My trading frequency since November is way down. I used to trade tens of thousands of dollars a day, multiple times a day, every day in 2021. And now I'm like being picky about doing 4 trades a week of a few $100 sometimes, because it's just harder to find good plays that I feel confident about.
It's okay, Tony. You know, Warren Buffett will go years before establishing a new long. So I mean, it's not
you guys know how I am. I got to feel like I have a much greater than 50% chance of being right before I'm going to dive in. Someone's saying, can we give a shout out to Pantheon? Absolutely. Go check out Pantheon's channel. I listen to him most nights if I'm not doing something else.
Love Pantheon, guys. He's one of the few in the community that really works hard for you guys. I mean, his content's very reliable. It's very thorough, and he goes through the full history of companies, which is very rare to be able to go back that far. I mean, he's got one video that he goes through the entire history of AMC, which is pretty fascinating.
Yeah, I tweeted that one out and put it in my community tab a couple days ago. It was the debt history of AMC, I think is what he called it. Fascinating stuff. It would have taken me days to pull that information together. If you're curious why and how AMC has so much debt, Pantheon has already done the work for you, and God bless him for doing that. And just in general, it's a good late night show if you're Europe or West Coast, or just an insomniac or a vampire like me that never sleeps. Great late night information, and a good group of folks in the chat always as well. Super Steven's YouTube channel is Just Another Ape. He's got some great DD on AMC and a few other plays, and you got some comedy stuff on there now, Steven, right?
Yeah, we started to go a little bit of the comedy route, and I
like that.
I hope to. I try to do both. I'm kind of the DD guy, and then my buddy, his name's Big Daddy Smurf. He's one of my best friends from high school, and he's been brainstorming some of the funny ideas and just some of the comedy that's surrounding the community, and we want to make some lighthearted. I'm trying to release my funny stuff on the red days, because I know people are typically down on red days. So, and then I'm releasing my DD on the green days, so that's that's how I've been thinking about it. Tony, I did just drop my what's it called, fundamental catalyst video on AMC if anyone's interested in.
Excellent. I'm going to check that out. And I know you did one on ChargePoint also. I'm still working through doing a due diligence video on every single one of the EV car companies. Guys, the information I'm coming up with is shocking and disappointing me. And in conjunction with that, after those are done, I've got 2 done. After those are all done, I'm going to go into charging stations. So go watch Steven's video. I'm purposely not watching it because I don't like to preload my brain with other people's videos. But he's already done one if you're thinking about buying ChargePoint. And I'll have one out in coming weeks, maybe a month. I got to get through all the car companies first. And man, the stuff I'm learning if you don't follow EV companies and you're just randomly buying them, you're going to be shocked at some of the stuff that I'm about to drop on you. Grandpa Barney says Angelina would make a great mod. Angelina, please DM me, or I don't know if you're a mod for the other channels. If you're already modding for Boss Blunts or Pantheon, I'm happy to make you a mod here. UPS delivery guy says, please ask everyone to go watch Pantheon's manipulation series. I will do that right now. Go watch Pantheon's manipulation series. I need to go check those out myself.
If you're really into that sort of content, in Pam the Trader's Discord, if you're lucky enough to get an invite, I would, they have Pantheon uploaded some incredible PDFs of talking about market manipulation, market structure, and just all kinds of extremely valuable content if you're into that sort of thing.
I see Diaz in the chat, or he was in the chat. He's a mod on several other channels also, isn't he? Should probably make him one for the times that Pam and Javi aren't here. All right, what else was I going to say? Oh, I know a lot of people have been wondering, why have I not been doing lives since like July 4th, or maybe before that? Maybe before that. If you're wanting just AMC content, there just has not been a lot to talk about for the last few weeks. We're in a declining market. There's not been a lot of news going on with AMC. There has been, I'm sure you guys have seen it, a lot of drama in the community between catalysts that didn't work out and people getting frustrated with each other over this, that, and the other. I don't want to come on and be on camera and have to answer my opinion on what I think about other people all day. You guys got enough stuff going on dealing with the market to be dealing with all that nonsense. And I certainly don't want to deal with it. So I've been working on other videos, and I've been spending the entire day, sometimes 20 hours a day, with the members of this channel. And if you hit that join button down below in the Discord. So it's not like I'm not here. I'm here all day working for you and working on stuff and researching stuff, just like getting ready for tonight's live has been a probably 60 hour effort in the last 3 days. So don't think that I went anywhere. I've been parceling out thoughts on Twitter, so follow me there, on my community tab on YouTube. And sometimes the stuff I put, being fact-based, is it hurts people's feelings, or it goes against the due diligence they were told somewhere else. I don't want to be on a live and deal with all that. I can easily ignore comments on a tweet. It's more difficult to ignore them when they're repeating them over in a live. So I also have just been buried with my other business stuff, the real way I make my money. Slinging hash, not just kidding. My other businesses have been very busy, and that should slow down by about July 12th. So expect some collabs over the weekend, some other videos that I've been working on over the weekend, some lives over the weekend, and then we'll get back to regular schedule of morning and evening lives. It's really tough to day trade and make money in a down market. And there are people that are supporting this channel and by hitting the membership button, and they're in the Discord, and my time is spent helping them make money. Some of these guys, Steven, maybe some other people in chat, have had $400-600 days on in and out trades over the past few weeks, when I've been sitting here helping them sort through all the wheat and the chaff. So I'm still here, but I'm trying to make sure my time is spent where it is the most useful. And sometimes I got to make money for myself too, because YouTube does not do it. This is not I don't put out 20 videos a day to generate $10,000 a month on YouTube. That's not what this channel's about. So I put my time where it's most useful for me and for you. And if there's something important to say about AMC or GameStop or to be streaming live, I absolutely will be there. Any other final comments, Sufyan, Stephen?
What do you think about earnings coming up?
I'm as AMC. I said earlier in this live stream, I'm kind of disappointed that GameStop has been on a negative trajectory for earnings, but I still have faith in Ryan Cohen, so I'm giving him a pass for a few more quarters. But the thing that I like about AMC is we're seeing revenue go up, gross revenue, and we're seeing, even though we're still in negative earnings, we're seeing improvement every quarter. And we've seen just a blockbuster quarter in terms of box office revenues. And I don't know if we will get a profitable quarter this year. That's something we've been talking about for the last, how many days, guys, in the Discord? 2 or 3 days?
Yep.
We've been going through financials all the way back to 2018, trying to make some best guesses about could AMC pull out a profitable quarter. What is the earnings call? Is August
7th.
4th or 7th?
Nope, it's the 4th. They was the 7th. They moved it back down to the 4th,
Right.
which makes me
So-
speculate in my 8 brain that he is excited.
Yeah, in our tinfoil hats, we think it's good news that they pulled the date to the 4th, but we're not going to go into that just yet. I'm going to let Stephen break some breaking news. Did you break your breaking news,
Yeah.
Stephen?
I uploaded the video, but I haven't said it yet. I can say it here though, because you got the good people in here.
All right. Well, break the news and then tell them your
Let's
channel.
break the
again.
news.
I'll let the video speak for itself because I really go into depth on why I think what I think in that video. But I've speculated for the last 2 or 3 weeks that I believe that there is 3 things that have to occur for us to see a substantial rise in share price. And these are fundamental things I'm about to say. So if you're not into that, I'm sorry.
For AMC.
Yeah,
right?
This is AMC I'm talking about. The very first thing is obviously the balance sheet. There's no secret that smart money, bigger institutions, they want to see a good balance sheet. And once we give it to them, because I think we will with Avatar and these great movies coming up. And don't sleep on Q3, guys. Like there's a lot of good movies coming out in Q3 that'll surprise. So first step, profitability. Second step, I believe a partnership is underway between Paramount Plus and AMC Theaters. There are several reasons to believe that it is happening. I wanted to be one of the very first creators to put this information out.
Let's leave the reasons as
I'm
a
gonna leave
teaser
them.
for them to go watch your video.
Yeah, I go through the reasons in my video if you guys are interested in that. And I believe that if a partnership goes underway, we overall have a much faster track to fixing a lot of the current issues with AMC, like the balance sheet. So it can speed everything up really fast with a partnership. And then the third one was an activist investor. It's kind of a tinfoil hat theory, but I believe that we've been getting a lot of attention from celebrities. You know, Elon Musk tweeting pictures of popcorn, and Justin Bieber last year putting stories of, Chance the Rapper. All these guys are repping AMC and they're talking about it, and everyone's getting excited again. So my tinfoil hat unknown catalyst is I do believe we'll have some sort of celebrity figure come out and say, hey, I like AMC, I'll take a 8% stake or something. And I think that will really generate some FOMO buying and get us to where we're trying to go.
I'm most intrigued and excited. We've been talking for the last year. I have been that the catalyst that is going to set AMC off is what I call an unknown catalyst, something that nobody's been talking about, something that the hedge funds were not expecting. And the Paramount thing, if it were to come true, again, this is just speculation. We're not saying it's going to be that. We're not saying it's going to happen. We're not saying it's going to be the catalyst. But if it were to happen, as Stephen has theorized, that would be a fantastic, unforeseen catalyst. And I'd urge you guys to go to Just Another Ape and watch his video where he lays out his ideas about why this might be a possibility. It's good stuff. Thank you, Stephen.
Yeah, thank you. I really appreciate that. And a lot of these things are actually lining up coincidentally, not just tinfoil hat, just a lot of things seem to be lining up for August 4th. And I don't mean that in terms of share price. Like I'm not saying this will move the share price. I'm saying just a lot of things are coincidentally happening in that 3-day range. Like, you know, you have GME on the 22nd, and just 5 days later you have earnings through AMC, you have earnings through Paramount, you have earnings all over the place in that week. So I highly expect a volatile week in that range.
Yeah, I'm hopeful that we'll have a profitable quarter. I'm not convinced we will, and this is something we're working through with our little group. I mean, you can go look at analyst predictions, but analysts all have their own bias. So we're doing our own analysis, going all the way back to 2018 and crunching the numbers and comparing to the increased box office that we're looking at and all of the different revenue streams that AMC has different now than they did back in 2018, 2019, and increased prices, flexible pricing. There's just so many things that are different now. So as soon as we get that done, hopefully it'll be before August 4th, I'll talk about it.
Q3, they're releasing the Avatar 1, the one from 10 years ago. That was an unexpected news story that I read the other day.
Which one?
The first Avatar they're re-releasing in September.
Oh, yeah.
And then the second one in December.
I'll go watch that again in the theater. That was a fantastic movie.
Yep. And it's also remastered too. It's not just like you're watching the same movie. So, and they're probably most likely, don't hold me to it, but I think they're going to raise prices for it. They've alluded to, James Cameron, the director, has alluded to raising prices for Way of the Water and the original Avatar.
Someone asked for a link to your channel, Stephen. I'm going to go ahead and put that in. I think I can. Yeah. Oh, I see it. AMC Paramount. Video just dropped. Copy. Why am I repeating myself now? All right. There you go. Stephen, can you still hear me?
Yes, I can.
All right. I muted one of my tabs because I was having echo.
Nice. But it was great. Thank you for having me on. I know I jumped in a little late, but I got to get going.
I appreciate you coming in.
Yeah.
Sufjan, I appreciate you coming in, and to all of you, these two guys and everybody else that has been working on this with me. Last night, between talking to them and another content creator, these guys were with me till 1:30 in the morning, and the other gentleman till 2:30 or 3 in the morning. Just
always working.
To everybody, I want to say thank you. To all the people who sent me dissenting opinions and other links to look at, thank you. Again, I'm not saying that I'm 100% right, but I'm about 99% sure, 99.9, that what we've covered tonight is legit. If it's not, we'll find out in a couple of weeks, and I'll do an apology, and I'll do a correction video. We don't just gloss over it and pretend that it never happened. So thank you for watching, guys. I will see you this weekend for sure on at least one other live, probably with the Massalorian. We're trying to line up one with Casey Shaw, the Massalorian, and myself, the three amigos, and maybe some other due diligence videos on other topics. So I appreciate your time. Hopefully you learned something about GameStop tonight, even if it didn't meet your preconceived notions about what's going to happen, that's okay. You can agree with me or not agree with me. We can still be friends. I don't really care if you agree or not. I'm just presenting my thoughts, my opinions, my due diligence, my research, as well as the people that helped contribute to that. And we're all on the same team. We all have the same end goal to make money in GameStop and AMC and a variety of other stocks. So we're all pulling the same direction. It's not worth fighting over, but I do want to be the source that you can trust for non-hype, non-clickbait, really, research from a scientific method type due diligence. Thank you guys for watching. Sufyan and Steven, if you want to hang out for just 1 second, I'm going to go ahead and end the stream now, and I will catch you guys on the next video.
Thank you, guys.
Thank you.